if we get another leg to the northward side here in the stock market, one thing that could do it is we just see better manufacturing data. You know, the NAPM index, the PMI turns up or something. But I think the biggest thing is if Wall Street starts to raise earnings estimates, which have been falling all year long. And I'm feeling a little better about the possibility that that could happen here in the next 6 months or so. We've been struggling all year with economic reports coming in worse than expected, and the economic surprise index has been in the lower quartile of its history. When that happens, in the next 6 months, Wall Street tends to only raise their earnings estimates by about 1% annualized pace, or they often decline almost 40% of the time, as has happened this year. But as to your point, we in the last couple of months, we've seen those surprises go from lower quartile to upper quartile. And in the past, what that means is that Wall Street earnings estimates in the next 6 months often start rising at about a 12% annualized pace. So I think the increased momentum in the U.S. economy showing up in economic reports is probably going to be reflected by better corporate earnings performance, and that'll force Wall Street to raise their estimates looking out for the next year.
What's the?
I just want to tell you, we got the latest results on that auction, and it's, again, good news.
Oh, okay.
They put 100 billion out. They only took down 23 billion. So the combination is the Fed offered 160. The market only took down 70. So maybe we're past the worst time, or maybe the Fed is in the right place.
All right, and Paulsen should probably thank you because I don't know if he wants to actually talk about this next point, and that is that productivity for. No, I know you don't, because it's because of the tax reform and Trump, and you're going to have to give him credit, and you're not going to want it's going to kill you to do that, Paulsen. But you're saying for 10 years, what was productivity, and what's it been for the last since 2016? Tell me the difference. And you're like saying, this is amazing. This is going to continue, but you're loath to give anyone any credit for it, knowing you.
Well, it is amazing, Joe. We're having a silent productivity miracle, and it's getting virtually no coverage. In the first, 6 years of this recovery, between 2010 and 2016, productivity grew at 2/3 of 1% per annum. That was the worst 6-year period in any period in post-war history in terms of productivity. But in the last 10 quarters now, 2.5 years, which sort of dovetails with some kind of presidential election we used to have.
It kills you.
With productivity growth now in the last 2.5 years has jumped up to better than 1.5% per annum. It's up at 1 3/4 in the last year, and it's up at 2.6 in the last quarter.
Leishman does like this. It makes him happy. He's not sure why. I think it's the earbuds? Is that what you're saying? It's a new iPhone. It's anything but tax reform, right, Paulsen?
I think what is happening. I recently looked at business investment, and there's been a big decline in old era industrial manufacturing investment spending.
Yes.
But there's been an acceleration in the last 2 years in new era spending on information processing equipment and on intellectual property. And that acceleration has been very healthy, and it's surged since 2016. And I think that's why we're getting a productivity miracle, because new era investment, which now constitutes 54% of total business investment in this country, it's the first time new era has comprised the biggest share of investment. And so we can even have a recession in manufacturing, and it might just go right on because new era is now the biggest part of the dog.
Right. Well, we got DC involved now with these big tech companies, so they're going to put an end to this pretty soon, hopefully, with some much needed regulation. So stay tuned for that. You think there can be another? Actually, one more step higher with productivity based on what? You think it can continue, Jim?
I do, Joe. I mean, if you think about it, we're worried because we're in the longest recovery in our history. We're at full employment. That's concerning. What's the one thing you need more than anything else in that situation? We need a recovery extender, and that is productivity. The essence of productivity is it can extend a recovery. If we can do productivity at 1.5% per year, we could have job creation slow below 1% and still grow more than 2%, and not put a lot of pressure on a fully employed economy. So I think if earnings estimates turn up, Joe, with productivity in the corporate sector, we could have a good upside move yet before this ends.